a little technical glitch going on. All right. Give me a second, guys. I think you guys can hear me. Let me just start the video as well. You guys can see me clearly right there. Okay, and I'm just pausing the on. So this is a recorded, all the webinars will be recorded. How you guys are doing? A very good evening, good afternoon to you guys. Today is the 17th of June, 2020. So as you guys can see, I'll be conducting webinars, different topics every time, or continuation of a particular topic every day. So we've got every day from Mondays to Fridays. I might actually do the occasional Saturday, Sunday, if we've got something really important to actually look out for the week, like the week ahead, then I will maybe just announce it last minute and say that I've got some very important thing to talk about, especially with certain movements or certain trades that are on the float, for example, floating, and how do we actually deal with that. So anything urgent, if it requires some attention, I'll also have a weekend webinar from my home studio as well. So here we are doing it through the Errante's Education Center, and we are doing the webinars by topic, as I've mentioned. But the most important thing about each one webinar is to share with you guys some techniques, some skills, so that you get an idea of how to apply it onto real markets. This is the most important thing. Okay. All right, guys. So I've got my screen shared right there as well. So let me just make sure that I've got this one minimized right there. And okay, good. Exit minimize and minimize there. Okay, good. So now, for example, maybe we want to just go back to some trade ideas that I have shared as of yesterday. Some traders, I mean, most of the traders who have seen this little pattern on AUD JPY 4-hour chart, I've given a bit of a signal to actually sell at 74.10, take profit 73.10, and stop loss 75.16, 75.16 or 17. So that is still underway. It is actually on its way, but it's still got lots of momentum on the downside. It did actually went down from the entry price, went down about 76 pips. Then it went up from there to about, let's say, 70 as well. So you are probably on a float, but not a very big float, small float, maybe a couple of dollars or something if you're trading $1 per pip. But then we are aiming at a potential from here, basically a potential all the way down here, about 100 pips right there. Okay, so now since it actually went up, I mean, went down here and then went up right there, it's creating another A, B, C, D, a baby pattern. Okay, so I just want to talk to you about this because yesterday I shared this trade idea. So I want to actually demonstrate a little bit about patterns, geometric patterns, and how patterns can actually, how do you call that? From the C to D that you are trading, from the C here, right down to the D, you will have many smaller ABCD patterns. So you would most probably have baby patterns as well. So I'm going to draw that pattern, new patterns that have emerged in yellow. Okay, so you can actually take a look. So I've got A to B now here inside the C to D leg. Basically, you have, and then potentially there, but the C point is not really 100% yet. We don't actually have an idea of 100% for the C point, but it's still happening. So let's say theoretically, if it were to be a C point that is quite solid and strong, you are looking at another ABCD pattern in yellow. Okay, so that still gives us an idea that it could actually drop here. Okay, so that is your ABCD pattern, the baby ABCD pattern. So you might get many ABCD pattern, like a baby pattern from C to D, and that's how you can actually trade in stages as well. Okay, so this ABCD pattern itself will give us another potential entry if you are following the centroid area, and that is around here. So price hasn't actually gone there as well. So your alternative entry area, if you have not entered it at 74.10, you can actually enter it at 74.70 as well, because the centroid is too close to the 73.80. So we will never enter or exit in the psychological numbers. So this is what we want to talk about today. Of course, the title of the webinar is talking about how whether or not to trade the GBP. I want to talk a little bit about the GBP, but I want to tell you guys or share with you guys about using psychological levels, just the intro, the basics of psychological levels, so that you get a better idea if I were to conduct a second series of psychological numbers. So I'm thinking of conducting psychological numbers, entries and exit tomorrow as well, so that we can actually get a much better, give me a second. All right, give me a second, guys. Let me just check. We've got a call coming in. Give me a second. Okay, yes. So let me just check on the screen. Yes. Sorry, I didn't realize that. Let me just check. I thought I've shared the screen here. Can you guys see my screen at the moment? Yep, you've got my screen there, or even the chat. Let us also check on the chat as well and see. All right. Okay, good. Yes. All right. Sorry about that, guys. I actually done something here, and then my chat box also disappeared earlier on. So I was not aware that you guys sent me the message. So now it's okay, right? Okay. So let me just repeat that now. The ABCD pattern was a big ABCD pattern in purple that I shared yesterday. Now, from yesterday's move, now it has created a baby pattern, because when we trade ABCD pattern, we are not trading A to B, B to C, but we are only trading from C down to D. So it is a selling type, what do you call that, signal based on the ABCD pattern. Now, because of all the price movements, as you can see, it did actually fall. It fell about 70 plus pips, and then it went back up again another 70 plus pips, about 70 pips or so. Now it's on the way, possibly on the way down again. So it created today's move created a yellow ABCD pattern, a baby pattern in yellow that I have actually drawn. Now, that ABCD pattern in yellow has got its own entry area, which is at a centroid at the center of that pattern. The yesterday's pattern, which was a bigger pattern in purple, has got its own centroid area here. But if you look at this centroid area, and this centroid area is not really that far away, you see, it's actually almost the same. So it did actually point out to the 73.80. So both centroid areas pointed out to a possible entry of 73.80, but we are not going to enter in the 73.80 area. Why? Because it is bang on exactly on a psychological level. So today I want to talk a little bit about psychological levels and how you use psychological levels for only entry and exits. That means to find the best possible entry price, whether it is for a buy or for a sell, and you can use it for exiting. That means you'll take profit as well. And I will explain to you how it actually works. So I'll demonstrate the use of the psychological numbers and what it is and all that based on Euro USD. It's the easiest one to do, so that I can then use it as an example. It is on a live market now as well. So let us just use Paint. Let me just use Paint. So it makes it easier. Now, as you guys can see, the topic for today definitely is GBP, trading GBP and all that. But let us use Euro USD as the example for now, because it's got, the easiest price action that we can actually see. And it's the most traded pair as well. But then later on, when we start applying it, then I will apply it, show you how I apply it onto some trade ideas for GBP crosses. Okay, and then tomorrow's webinar will dig deeper into using the psychological numbers in combination with support resistance level as well as patterns, geometric patterns as well. Okay, so it is really an important part, a very big part in psychological levels and psychological numbers. So I have invented this style my own. I've actually tweaked it from certain other professional traders out there, but then I've been using this for over 7 to 8 years already with a psychological level for entries and exit. Okay, so now for example, for Euro USD, the price for Euro USD at this moment of time is 1.12 383, let's say. Okay, so I just want to explain this a little bit. We are using the live price of Euro slash USD. Okay, you guys can see my screen, right? Just to make sure, yeah, everything's okay so far. The chat, yeah, just to make sure, guys, yeah, you guys can see my screen and you can see me typing as well, correct? Yeah, okay, good. Let me just see, just to check. Oh, my chat has disappeared as well, so give me a second. I couldn't see my chat box. I can see that. You can see. Okay, good. All right. We'll go back to the price, sorry, to the paint, and we've got Euro USD trading at 1.12426. Okay, let's say 1.12426. Now look at the numbers running after the decimal place. 1, 2, 3, 4, 5. 5 decimal places. That means you are on a 5 MT5. Okay, so 5 decimal places. If you've got 4 decimal places, that's your MT4. And basically, I prefer to just use 4 decimal places, even though I'm on the Errante MT5 platform. I just want to delete this this last digit at the back. Okay, so if I were to delete the last digit at the back, I'll just make that round number 43 instead of 42. So I'll just make it as 1.1243, let's say. Okay, so in Malay, we say we bulatkan that anchor digit or something like that. Yeah, so 1.1243, let's say. Okay, instead of 1242, so we put it as 3, let's say. Okay, so we've got 4 decimal places. Now I want you to pay a lot of attention to the last 2 digits of the price. Okay, last 2 digit meaning here. Okay, there you go. So that's the last 2 digit. Now, if it is not Euro USD, if it is if it is usually JPY type crosses, you will get a different format of the numbers. Okay, so let's say the numbers are let's say 123.45. Let's say. Okay, you want to pay attention to the last 2 digit of the price after decimal, the 2 digits after the decimal. If there is an extra one at the back, like 8 or something, you just throw that away. Okay, and then you can bulatkan that as well if you want. So you want to make that round number. Basically, you want to make that closest to the last digit, as you guys I think get the idea. 1.1243 for Euro USD. This is if it's JPY, you look at the 45. So that is your last, that is the 2 digits that you need to pay attention to here. Okay. All right, there you go. So why what I use the psychological numbers for is to actually what do you call that, entry and exit for my TP and also for my entry. So what we actually do with psychological levels is that I have experimented on many sets of psychological numbers, and I've got 4 sets of psychological numbers. Okay, so let me just write that down. So these are your psychological numbers based on the last 2 digits, right? Based on the 2 digits that I have put there. Now here, this is, let me move myself up there. So psychological numbers, we've got 4 sets. The first set is 0, 0. Okay, obviously the Euro USD that you see here, that's 43. 43 is not 0, 0, so it's not a psychological level, not a psychological number. Okay, so then if 1.1243 goes, let's say, goes down and down and down and goes down to 1.1200, that is a psychological number. Or if it goes 1.11300, goes up and up and up and up, it reaches 1.1300, that is a psychological level as well. Okay, so here we have got four sets. Either it is 00, or there is no sequence. Okay, so either it is 00, 20, 50, or 80. These are all the psychological levels. Now, what are these psychological levels? These psychological levels tells me that when price moves, okay, I'll just draw. When price moves, okay, up, down, up, sideways, up, down, and then a fall, let's say, okay, up, down again, and up, and all that kind of movement. Each one movement that you see as it goes up and then it falls, okay, right? Then it goes down and then it rises. So these are all the support and resistance that we have actually talked about yesterday, correct? So anything here, starting point is your support. Support will go up, and then you've got resistance here. This is a minor resistance because it's a small resistance because of a smaller move that came down with it. Then you've got a very big support here, okay, all the way up, and then you've got your resistance again. Now, usually the support and resistance happens very close to these psychological levels. Now, this is something that is really very interesting. It has actually happened over my 12 years experience of trading. I've not seen it change. Touch wood, I don't want it to change. I see that, of course, the other people, trainers, or they call themselves gurus and all that, they've got many other type of psychological numbers, and they give you round numbers, and they call it round numbers. And what happens is that they tell you to actually trade exactly on the round numbers. Now, I've never done that, okay, because it is very dangerous to actually trade, enter your trade, or even exit your trade exactly on these levels. That actually means that if, for example, let's say, for example, Euro USD is trading at is moving at the moment, and it's trading at 1.1250, and you think it's going up and you want to buy. So because it is actually very close or exactly on the 1.1250, I'll never trade, never enter the trade, never exit the trade exactly at 1.1250. The reason is because whatever that is going up may actually reverse very close to either one of the psychological numbers, or vice versa. If it's going down, it might actually reverse in any one of these psychological numbers as well. So if you are actually buying, don't actually enter the market when it is actually too close to the psychological numbers. Within 10 pips or so, still is better not to actually what you call it, trade when it is too close to the psychological numbers. Now, how do you actually trade using the psychological numbers? It's actually very, very simple. Now, if you want to buy, you need to actually buy. First question is, which psychological number is the current price very close to? So let's say 43, okay? Let's say 43. The number 43 itself, if the price goes up, it will meet 50 first, correct? Right? If it goes down, it will meet 20 first. So that actually means that the Euro USD trading at 1.1243 is very close to 1.1250 on the upside, and 1.1220 on the downside. I hope that makes sense. Okay, so you're just paying attention to the numbers, and you want to make sure that you know the current price is closest to which psychological numbers that I have given you. I'm only using these four. I've never changed for the past 10 years these psychological numbers that I use, and I use it until today to actually enter the market and exit the market. So this is a very simple experiment that you can actually do when you trade Forex. When you trade Forex on a real account, you can actually go back to your history and you look at all your losing trades. And most of the time, your losing trade is actually at the wrong entry price or wrong exit price as well. Most of the time, entry price is too close to either one of the psychological numbers. Okay, so what happens is that the way you actually use these psychological numbers are very, very simple. To enter the market, whether it is a buy or sell, you first need to understand whether it's a buy or sell. If it is a buy, it is better for you to buy 10 pips above the psychological number. But your first question needs to be, which psychological number is it closest to? Now you have got two choices, right? You have got your psychological number to the upside and psychological number to the downside. But then if your direction is going up, basically, if you're thinking of buying, you want it to go up more. But if the price of 1.1243 going up and up and up, it will go and reach 1.1250, correct? So the closest psychological number following your direction is 1.1250. So that actually means you cannot buy at 1.1250. You need to buy above 50. Okay, so your first question is answered. The closest psychological number is 1.1250 because you are buying. Okay, because you are buying and you are looking up. But then when you look up, there is a challenge, an obstacle whereby 1.1250 is too close. Because 1.1250 is too close, if you are buying and buying now, then if it goes up to 1.1250, that is where it might reverse. So it's not a good idea to buy now because it might reverse at 1.1250. So you need to give it time a little bit more to see how strong the buyers are going to be. Usually, if the buyers goes above 1.1250 and above, at least 10 pips above, then the momentum of buyers will come in much more. Then you can buy. So you can actually then buy 10 pips above 1.1250, not 10 pips above the current price, 10 pips above the closest psychological number. Okay, so don't worry if you don't understand now, because we will do it in practice, and hence the reason I want to go back to it in a deeper manner tomorrow as well, so that we can really use this technique. This technique should actually be, this is just a price action technique. It's not even a strategy. It's just to know the best way to enter the market with the right price to buy and the right price to sell. Okay, because this is what happens. Let me just give you a bit of an idea. Now, for example, I'm going to give you a demonstration live, okay, on how these psychological numbers work. Now, we go to the past first, and then we will go to the current price. Now, you guys can actually see what's going on with all this big movement. You see that big movement here? It went down from that area all the way down here, correct? So I just want to demonstrate to you on the psychological numbers. Usually the reversal, you see price went up, but then it reversed there and it fell down. So that was a reversal there. This was another reversal whereby it came down here, it reversed and it went up. Okay, so you got all these reversals. Now I want to show you that the reversals are usually happening 90% of the time, maybe if not 90, maybe more, maybe less, but then it's in the 90% region of the psychological levels I have just given you. Okay, so the four sets of psychological numbers. Now pay close attention to what I'm saying here, because this is basically on a live market, and no trainers out there are actually teaching you psychological numbers entry and exit using psychological numbers the correct way, because this is my own way that I have actually used it by experiment. So a lot of other people use psychological numbers as entries and exits, but exactly on the dot. This is actually, I don't find it very effective. I find it very risky as well, because I want to demonstrate to you exactly why I'm using it the way I'm using it, and I want to share with you that way. And this is why. Now look at this area here. This was a reversal. So I will put two lines. One line, I will put it onto the highest body of where it has actually reversed. Okay. And then the other one, I'll put it onto the highest wick. Let's say this wick here. Okay. So you can see that the two lines indicates the price, and we want to see whether or not it's closest to which psychological level. Okay, so here for example 1.14, let's say 97, because I'll throw the last digit away because I want it to be only 4 decimals. Okay, so 1.1497. Now 97 is only 3 pips away from the 1.1500 psychological number. Hence the reason it reversed. Now, the other thing as well is you can see that it's 1.1463. Now, 1.1463 is not very close to the 50 or let's say the 80, but usually what happens is that when I want to sell, I will sell at the closest psychological number and below if I want to sell. So you need to sell 10 pips below the closest psychological level, and if you want to buy, you buy 10 pips above. So I'll give you a bit of an example. Let's say this price right here was 1.1463. Now 63, if it were to go down more, because I want to sell, I want it to go down more, but if I want to buy, I want it to go up much more at a good zone, and then I buy. If similarly, if I want to sell, I would need to wait until it goes down more, because you want it to be stronger in the trend first, and it needs to reach the closest psychological number and go under it. If it is for sell, it has to go under the psychological number. If it is for the buy, it needs to go above the psychological number. Why? Because then you are getting the right location of your price. Okay, so location really matters in terms of price action as well. It matters in terms of patterns as well, but it matters the most with price action. That actually means you need to actually buy or sell at the right price. So the psychological numbers will then give you a better indication of the best price at the time. Okay, so here, for example, 1.1463, because 63 is here and I want to sell. Now, I need to know 63 needs to go down and down to meet 50 first. And once it meets 50 and it goes under 50, at least 10 pips under 50, at 40, then I know I can actually sell. So it is a better price to actually sell at 1.1440. That is for the sell. But if I want to actually buy, I need, let's say, this above this area. If it is at 1.1497, 97 only have 3 pips away from 1.1500. So I cannot buy at 1.1500. I need price to go above 1.1500 so that I can buy better. So it needs to be 10 pips above 1.1500. So that means 1.1510 will be a better price to buy. Okay, don't worry if it is not making much sense now, because we want to really put it in action into a live market, into a trade idea as well, and you need to practice that and go through it all the time until you get this idea really ingrained in you and you are used to it, and you are using psychological number all the time. That means you are tweaking all the price to the right pricing first, and then you buy or then you sell. That is where it matters the most. So this is where we are using psychological levels for how you call that, polishing our entries and our exits. Okay, so don't worry if it is not making much sense now. Now let's look at this area here. Okay, I just want to demonstrate the reversals of the reversals, whether or not they are close to psychological levels or not, or psychological numbers. Now here, for example, let me just get that and mark the lowest body. And also now the lowest body goes to, the lowest body goes to 1.0660. Okay, 1.0660. Now 0.660 is just about 10 pips. The difference is about 10 pips from the 0.1.0650 psychological level. But then look at the wick right here. If we go on the wick itself, it reversed at 1.0634. Okay, and 1.0660 is 10 pips from the 50 psychological level. Okay, so it is it really reversed there, really I would say quite close to 1.10 pips away from 1.0650 psychological level. Okay, 0.650, 0.630. So that is why we want to always, if you are selling and selling and selling, you want to take profit, you wouldn't actually wait until it goes to 1.0650. You want to take profit at 1.0660, okay, because it needs to, that is where the bomb explodes. I always tell the traders that, okay, at either one of the last two digits. But as we get along, you'll get the idea much better. So here, for example, price went up and up and up and up, and it started to reverse here. Why did it reverse there? Let us look at the highest body. The highest body of the candle was at 1.1140. Okay, 1.1140. Now 1.1140, why did it reverse there? It reversed exactly 10 pips under 50. So if you were to wait for that to go to 1.1150, you would have reversed before reaching 50. Hence the reason we want to get out 10 pips under 50. So 10 pips under 50 is 1140. If you took your take profit at 1140, you are safe, and it actually reversed exactly on the spot, and it came down, right? So then it came down, and it came down to this area right here. This area right here, before it went up, was at 1.0772. That's only 8 pips away from the 80 psychological level. So you can actually see that either the wick or the body will always reverse within 10 pips or so of the psychological level, almost 90% of the time. Okay, so it is very important for us to apply psychological levels into our daily analysis. So this is why I would like to emphasize a lot on psychological numbers, because it can then help you guys to cut your risk at least 40-50% of the risk, to actually understand how to enter and exit using the psychological levels. You have to tweak your price based on psychological levels. Okay, so now here, for example, let's follow the example that we have had on AUD because we have already drawn patterns on the AUD So for AUD for example, we have got a price, right? A new price. Let's say you want to enter a sell based on the yellow pattern and on the centroid area. So the centroid area there gives us a price of 73.82. So we look at 82. We throw the one at the very end, okay, because the price is at 73.85. Let's say 80, 73.811. We just look at 73.81. Okay, so 81 itself, 81 we want to sell, and 81 is only 1 pip away from 80 psychological number. Because it's too close to 80, we cannot sell or buy or whatever. But if we want to sell, we have to sell 10 pips under the psychological number. So what is the closest psychological number of 73.81? It is 73.80. So 80 you cannot sell there, you need to sell under 80 by 10 pips. So 80 minus 10 is 70. So your selling price, ideal selling price, better selling price is at 73.70 if you are following that new pattern in yellow. So if I want to sell and I see that it is actually having a good momentum to the downside, I want to sell at 73, wait 1 second, 73.70. Okay, so 73.70 I sell, and then I look at this this end of the yellow pattern showing me a potential take profit at 72.57. Now 57 is here, okay, but 57 is very close to 50, correct? Right? So if I want to sell and I want to take profit, if 50 is here, I have to take profit 10 kilometers away, 10 points away. That means before it reaches 50. Okay, 50 is here, so 10 points above, there is a distance of 10 pips will give you 72.60. So 72.60 you have to exit. So your take profit will be 72.60, not 72.50, because it is too risky. It could actually find support anywhere there at the 72.50 area. If you look to the left, there was also a support there. So if you were to actually follow this yellow pattern, another signal for you for a sell for AUD is for you to actually sell at 73 73.70. Okay, 73.7 second 70, let's say 70, huh? 70, and you want to actually what do you call that, enter at 73.70, and then you want to take profit at 72.60. 72.60, go down a little bit more. Okay, so it's about 111, 112 pips as well, if you were to actually enter there, because the yellow pattern with its centroid is really very close to the big purple centroid anyway. So that's why it's good. So what you will find is that if prices were to fall more, it'll create like a zigzag, ABCD pattern, ABCD pattern until it reaches the D point. And for every one little pattern you can actually trade, and that is what gives you the trading in stages possibility. Okay, so your little pattern inside the big pattern from C to D is your stages. So you might find ABCD, 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 and you are trading one ABCD after another ABCD. So you're trading the baby patterns, okay? But then when you want to enter and exit the market, you're using the strategy or the technique of psychological levels. So you need to tweak the price of the psychological level. So that actually means that if, for example, I want to sell and the price given to me on the centroid is not the price I will enter exactly, I want to tweak whatever price that is given to me, tweak it based on psychological numbers. I hope that makes sense. So far, so good, you guys? Yeah, everything okay? All right, let us do a little bit of practice on the psychological numbers before it's still on the Euro USD, but I want to move on to GBP crosses, because I find that GBP crosses, especially GBP USD, Euro GBP, may actually give us a lot of opportunity in trading because of the volatility, because of what's going on in the market, in Europe, in the UK as well. And it looks like they've got a lot of connection. GBP crosses has got more correlation with gold movements as well. So I want to also look at gold movement. But the psychological number technique or strategy that I have given you today or shared with you today, it's mainly for currencies, not for the other instruments. Okay, and it can be applied. I mean, it doesn't affect the time frames, of course, but it's just the pricing. So you need to make sure that you are really connected to your platform as well. Your platform is live and running, and then so that you can then tweak the numbers accurately. If not, sometimes traders get confused. Their internet or Wi-Fi is not even on, so then they are not looking at the current price or live prices as well. So this is where you have to be very, very careful to make sure that you are on a live market and tweak the prices accordingly to psychological numbers, but correctly. Okay. All right, guys. Any questions so far? How has it been, the psychological numbers? Is it driving you psycho at the moment? Not yet. All right. How is it going? All good? Let me just give me a second, guys. All right. Let me just make sure I've got the camera. There you go. I think it's much better now. Okay. All right, guys. Okay. So here we go. You guys can see my screen clearly. All good? Okay. Now let's take questions and let's see how has it actually been for you guys talking about the psychological levels. I must be a bit of a technical glitch with my chat, because the chat is not really showing at the moment. Give me a second, guys. Let me just make sure I've got my chat there. There you go. All right. So, okay, all good. Yeah. So you guys are following it well. Noshini and the rest of you guys who are brand new in the Forex side of it, because I would like to see you guys start trading as well, and for us to actually look at how we can actually put all these information into practice so that we can then start trading using these skills to actually trade live. So okay, so far I think it's good. You guys are in the right pace, but as I mentioned earlier on, it needs it needs more. I would say more tutorials on applying psychological numbers, because this is just a very little piece of the puzzle that needs to be applied every time when we trade, because this actually concerns the entries and exits of your trades, you see. So because of that, it is really important for us to always have the discipline and the patience to actually tweak your prices accordingly so that you get the best of it with using psychological numbers to actually enter and exit the markets. Okay, so this is basically it's also something that you guys can experiment yourself and look at the market, or technically look at what you see and use the cursor right here, or we call it the crosshair tool right here, and look at where it has reversed. Like for example, I'm looking at Euro USD, and it has reversed from the body's perspective, the body of the candle right there. Okay, it has reversed at 1.1390. Okay, so 90 is just 10 pips under the 1.1400 psychological number. So imagine if you're actually buying and buying and buying, and your eyes are aiming at 1.1400, but then look at where it reversed. It reversed 10 pips before the 1.1400. So that is why it is really important for us to understand how do you actually make use of the movements and price action of any instruments within the forex within forex instruments, basically, to actually use psychological numbers to be safely out and in the market. So this is basically what psychological numbers are for, in order for you to buy or entry for a sell or a buy with the right prices. That's basically it. And also exit in the safest manner possible, or at the safest level possible. Okay, so that's basically it. Now let's just experiment the psychological number once more on a very random pair that you guys pick, and then we look at whether or not it works on your pair that you have chosen. So any ideas on a pair that you guys would like to look at today? Share with me a pair that you would like to take a look at before we go on to GBP crosses, because GBP crosses are expecting a heightened average movement of pips starting tomorrow. Usually they've got their own behaviors in moving. So we've got a personality type of pair. So like the Euro JPY, for example, it moves the best and the most following average movement of pips on Thursdays better than the other days. But on Wednesday night onwards, it starts picking up. So that is why we would like to ride along the volatility as well as the heightened average pip movement of each pair. So Euro USD, they've got its days like Tuesday onwards, Wednesdays up to about Thursday as well. But then we have got average movement per pips would actually reach up to about 250 to even 300 pips for Euro JPY, and also Euro crosses that are quite exotic, like Euro GBP, GBP JPY as well, for example. So this is where we want to actually take advantage in understanding, take advantage of trading by understanding personality types of pairs. So this is another topic that we will go into as well. And I think it is best fitted to actually have a topic on personality type of the pairs next week, because we have got a very busy fundamental or economic data docket next week, and I want to look at how we can actually match the personality type, or understand and filter the personality type of pairs with certain strategies in order for you to benefit in trading the best possible way of each pair. Okay, so that is basically it. Now, any questions? You guys have been really quiet as well. So any questions at all following what I've just said about psychological numbers? Firstly, about whether or not you guys understand psychological numbers a little bit better. Now, don't worry if it is not very clear, because we are going to be clarifying it much more, especially tomorrow as well. Tomorrow's session, I would like to combine that with certain strategies. No questions. You guys are very quiet. Pratap, you want to shoot off with some questions to guide the rest to actually ask more? The rest has been really, really shy. Ashwath, you okay? Noshini as well, and maybe the rest of you guys. Questions. We need more questions in order for us to fuel our curiosity in order to put them all in action. Okay, let me just, I need to go. All good? Ashwath, no questions at all. You understand psychological numbers application on entries and exits? So far, so good? Okay. Now, have you guys started trading, Noshini? Have you actually placed any trades at all already? Or the rest of you guys, what were your trades for today? Perhaps we want to look into what we can actually trade for the week, so we can actually then look into the probability of benefiting from it. It's only from trading it real, not trading it on demo. You get demo money if you trade on demo, but you get real money, following probabilities, of course, if you trade on the real account. No questions? More questions, guys. We need to be more proactive, look into more questions, so that this is the way we can then learn much more and apply. We need to bridge the gap between theory and practice in a very, very different way, so that we can then be very consistent and benefit from the market's movement. Any questions at all, guys? You guys been very, very quiet. Meanwhile, waiting for your questions, I'll be going on to the GBP pairs, looking at GBP JPY at the moment. As I've mentioned earlier on, it's a different format for GBP JPY. The price is trading at, let me just write it down. Give me a second. Okay, good question. Pratap, I haven't read the question yet, but you've got a few lines, and I like looking at a few lines making up a question. Okay, so after speaking to, mention is not sure about making trades and would like to mention what is to buy, limit, sell. Okay, brilliant, good, very good question. Now, yes, you've got a couple of options. Now, before we go on to the GBP JPY again, we'll continue that. It's really important for us to look into your when you want to make orders, you've got a very simple button right there. It's your new order button. But of course, you've got options. You've got options in understanding when you make your pending order, for example, you've got options. You've got the limit, and you've got just the normal buy stop, stop orders and limit orders. Okay, so your stop orders, you just see it as the stop orders is when even if it is a buy stop or a sell stop, it's when you are looking at the market and the market is going towards your direction, you are using the stop orders. Okay, so for example, I am buying and I'm seeing that the market is going up and up and up, and I'm buying and I click on buy, and then it's still moving on, it's on its way, moving towards my direction or towards a trend that I have actually decided on. That is your stop orders. Okay, but a limit order has got a limit towards your decision. That actually means that you feel and you have done your analysis that the market is going to go up, but at that moment of time there's a lot of volatility as well, and then it's causing the market to experience some correction and all that. It's not gone up yet towards your direction, but it's going to the opposite direction as a reversal or a correction. Then you are most likely be able to actually fill up the order as a buy limit or a sell limit. Okay, so when it is going opposite your direction at that time, you are most likely to be able to open a limit order as opposed to a stop order. So it all depends on the market as well. It depends on all the execution of price at the time, the volatility of the market. So if you are not able to click onto one order type, you try the other order type. If you click on buy stop, it doesn't actually work most likely because of the volatility at the time. It may be going towards the opposite direction. So hence the reason the buy limit may actually work. So that is all it is, basically. Okay, to help you understand what exactly the stop and the limits are practically. Okay, very good. Lot sizes, I'll make it really simple for you guys, okay, in the most practical manner. Now, here, for example, you've got lot sizes in the platform, the MT5 Errante's platform. You have got it as 0.50. You've got it as the word volume in there. But whatever you see, if for example you see one, okay, it's not $1, it's not nothing in dollars or anything like that, or any other currency. Anything you see here has to be in lot, so it is actually one lot. If it is 0.5, that means it's half a lot. But one lot, if you have it as one lot, every pip will actually move, and it will be a value of approximately $10 per pip. So it's too big. If you trade $1, that actually means that, let's say 10 pips has gone towards your direction, you have just made 10 times 10, which is $100 in maybe seconds. So, but also you can similarly lose that amount as well as your risk amount if it goes opposite your direction. So you want to be really careful in understanding that whatever you type here is your per pip value. If it is 1, that means $10 per pip. If it is 0.5, it is $5 per pip. So if it is actually 0.5 like this, it is $5 per pip. So if it is 0.1, $1 per pip. 0.10, it's $1 per pip. Okay? 0.01, 10 cents per pip. Like that. Okay, so just to make it easy, and once more, if it is 1, be very careful. 1, it could potentially be too big for you guys. It depends on, this is where we want to cover a different topic on risk and money management, so that you guys understand your equity, understand your time frames, understand your lifestyle, not your lifestyle, sorry, your trading style, to match it, and then you will decide on your lot sizing. So this is another topic that we will get into, which is a risk, which is a lot sizing and risk management, risk and money management together. Okay, but then we want to know, how do we decide on lot sizes as well? For now, for example, you guys can actually test, because most of you guys have actually deposited, let's say, your $500, right? So $500 as your equity. Now you want to not risk it all by looking at one lot, for example, at this moment of time. You want to look into experimenting as well in the $1 or 50 cents per pip, what do you call that, regions first. But then we want to cover that specifically at another time, not now. At the next topic, for example, next week, let's talk about lot sizes. Okay, so how do you actually decide the right lot size for you? I've got a very, very simple formula for that, but it does actually depend on your risk aversion, your level of risk, your risk appetite as well. And we've got a simple formula to help you understand whether it should be for you at the time $1 per pip, or $5 per pip, $10 per pip, which is one lot. It all depends on your risk level as well. Okay, so your risk level in pips and your risk level in dollars. This is very, very important out of your equity. So out of your equity, you need to know the percentage that you are willing to risk per time, per trade, and it all depends on your trade plan, your expectations as well, your goals, your personal goals, and hence the reason we want to have specific topic that actually covers specific areas that will all then match up to actually make out the right trade sequence or trade plan for you. So this is what we want to go about. So as of now, you want to go into the minimum lot trade size first, to make yourself familiar with Errante's trading platform and trading conditions as well, execution. Hence the reason it is important for me to actually guide you on the market analysis part, so that you tend to pick better or lower risk, higher probability pairs to actually trade for the day. Okay, so is that okay so far? Yeah. So zero, if you are typing in at the volume section 0.10, okay, that's your $1 per pip. Okay, 0.10. If it is 0.5, that's half a lot. That is $5 per pip. It's a bit too big for now. Okay, so but it all depends. It depends on your goals, because from your goals of what you want to achieve, we can then look at your risk appetite. From your risk appetite and your goals, then it will have a better guidance into your equity level. Okay, so we need to look at forex trading as driving a car. I mean, you want to get to a destination, you need to actually put in more petrol. You need more fuel to actually fuel your journey to actually reach your destination. So if you've got a very high expectation, high goals to actually earn per day this much, and you need to also know what's your risk level. What are you willing to risk? So with what you are willing to risk and what you expect to earn comes the equity level that you need to actually commit to as well. Now, this is all, of course, is a discussion personally with myself, and then I'll guide you through as well, or we can always address your questions in the webinar itself, and then we will go through the topic, the specific topic that will actually touch that specific area of trading, which is lot sizes. We've got lot sizing, what do you call that, webinar next week. So next week on Monday, I'll organize a topic on the lot sizing side of it, because we've got three categories of webinars, and my tutorials and my mentoring and mentorship and all that has got three categories of topics. Okay, so we have got the psychology side of the topic, which I would say cover about 60% of the entire process of trading. 60%. So you've got a psychology of trading. It may be theoretical, but I want to make it as practical as possible. We've got steps in becoming more focused, more disciplined, and more patient as well. So that comes under the psychology related topics. Then we have got money and risk management, which covers about 30% of the entire process. Okay, and then we have got 10%. Basically, you guys may be very surprised. 10% of the entire process comes under strategies. So strategies would only be 10% of the entire process. Okay, so but we want to have an overall approach whereby we have, in the analytical side of it, we want to use fundamental and technical together. But then in terms of an approach for trading and trading processes, and for you to have a trade plan, we want to balance between the psychology side of it, which makes up about 60% of the process, and then you've got your risk and money management side of it, which is about 30% of the process, and then we have got 10%, which covers the strategies, techniques, anything you see, like what I've drawn onto the analysis and all that, basically just made up of that 10%. So I would like to then share with you guys a lot more throughout all the webinars that we have at Errante Education Center, where we can then make it a course structure for you to actually learn forex trading practically as opposed to theoretically. Okay, right? Does it make sense, you guys? You guys are very, very quiet. Does it make sense at all? All good so far? It's okay? Yeah. Lot sizes, I just want to touch on that a little bit, but then we want to cover the exact formula in our webinar. Okay. In the webinar on lot sizes, we want to I'll execute a couple of trades live as well to actually show you, give you an idea. If I were to be a very conservative trader and my risk is this percentage, what is the, and my goal is as such, my risk appetite is as such, what can I fill into that simple formula? Okay, so we want to also find out a little bit about yourself, about your risk level as well, your goals, risk appetite, and various other little things that will then give me an idea of how to customize that approach of trading for yourself. Okay, would that be good? You guys okay? All right, you guys gone quiet on me again. Any questions? No questions? All right, guys, I think I've just got another 5 minutes or so, and would like to cover the GBP JPY, let's say, as an example right here to apply what we have actually talked about, because we do actually see loads of movements, expectations of volatility on GBP crosses, and we're looking into different levels, for example, that would then help us decide whether or not we combine GBP with a euro, we combine GBP with USD. We want to look at certain other instruments that would give us some hints to us of the strength of GBP or the weakness of GBP. So it does actually depend. If it's on the strength side, we can then combine GBP with USD, for example. If it is on the weakness side of it, then we combine GBP with euro, for example. But it's probably better for us to do it practically, and this is basically what I would like to demonstrate further on the use of psychological numbers and various other elements, ingredients that we have talked about yesterday. When we want to trade, we actually trade um, as though we are cooking. We're actually putting all the ingredients together at the right time, and the right amount of ingredients as well. And it's the same thing in trading. You're actually putting the right ingredients in terms of indicators, in terms of price action tools, and in terms of tools, trading tools like heat maps or volatility charts or various others. So all these are metaphorically ingredients in trading as though it is for cooking. Okay, so it's the same sort of metaphor that I'm actually using. So it is very important for us to know the location as well of patterns, price action, and always looking to the left as well as part of your what do you call that, efforts in understanding price action of the past that may give you hints of future price movements as well. So this is basically where we want to go on a daily basis, on webinars as well, to help you sharpen your trading knowledge and skills, especially. Okay, so let us do this very simple analysis. Explanation on GBP crosses. Yes, Joseph Onoja, how are you doing? Now, the thing is that I've actually explained a little bit about GBP crosses, because the thing about the GBP movements has got, because it's expecting loads and loads of volatility, the understanding of price action together with psychological prices is really very, very important. The reason I say that is because the traders are becoming overexcited into understanding when they hear about GBP being a very good pair, very good currency to actually pair up with other currencies. GBP crosses are good to trade. They get very, very excited. But the thing about the excitement is that sometimes it becomes overexcitement, and that overexcitement will make traders enter the market a little bit too soon. Okay, so when you enter the market a little bit too soon, you may actually miss out certain element of price action or understanding what is the best sort of prices to actually enter and exit the market. Hence the reason I wanted to combine psychological numbers, support resistance that we covered yesterday as a topic, together with psychological numbers today. And then for tomorrow, which is Thursday the 18th, we will then look into psychological numbers on a deeper level, but then I will be able to lay out all the trade setups for you on GBP crosses. That is the plan. Because if we were to just go into all the trade plans or the trade setup for GBP crosses today, what would then happen is that you would then be making very risky decisions, because your understanding on psychological numbers are not really very solid yet. So now at least we have got a bit of basics. Tomorrow we can actually add up the psychological numbers, what you call that topic, into the crosses and the setup. Okay, so for example, just to answer Joseph's question as well, with regards to GBP crosses, because of fundamental research as well, when we come into deciding or expecting more volatility into GBP crosses. GBP crosses works in a very unique way. That actually means that if traders are to pick GBP crosses, they would then look into FTSE and various other instruments that concerns the UK and impacts the GBP and all that, to understand whether or not GBP is most likely to the upside or to the downside. So let me just give you a bit of an example in using some tools first, right? So for example, we have got, let's say, Action Forex heat map. Now we are in the process of having our own tools in within Errante, so that would then make it really easy for traders to actually look into tools like this to give us a bit of a bird's eye view of the trend. Okay, so for example, if I were to go, if I were to use the heat map onto the pound, now look at the pound here, for example. Now the pound is on the left. Now the pound versus, you want to look at each one column, and you want to look at whether or not it's got steady type colors, not mixed between the blues and the red. If it's all red and mixed between dark red and light red, it's okay. If it is a mix between the blues, between dark blue and light blue, is okay. So if it is one color but two tones, it's fine. But if it is a combination of colors like this, like red and blue, all in one column, that actually means that it needs more time to actually strengthen the trend. So with the GBP, as we can see here, GBP is seen to be weaker than commodity currencies. Okay, what are the commodity currencies? They are the CAD, which is Canadian dollar, because they are one of the main producers of oil, so they are called the commodity currency. AUD and NZD, they both have minerals that they sell to China a lot. So you've got the copper, you've got the iron ore, you've got various others, and that's basically, these are one of China's main trading partners, but Australia mainly, okay, and also Canada, but Australia leads the pack with the most commodities, minerals, and all that sold to China, and then China makes it, process it into goods and everything else, and then sell it back to Australia. So here, for example, we are looking at the downside, the downside of GBP versus commodity currencies, and it is actually showing one color right here. So that actually means that GBP is much weaker than CAD, AUD, and NZD, but it is actually a lot weaker than Australian dollar. That means strongly bearish because of the dark red on the 4-hour chart. Okay, let's say an example with GBP versus NZD. It's really very weak on the 4-hour, the daily, and also the monthly. Now, do we actually just look at this tool and then go straight onto our chart and rush and click on the buy and sell? The answer to that is, of course, a definite no. Okay, if you want to gamble trade, yes. If you want to trade invest, then it's a very different story. So here, for example, we're looking at the possibility or the probability of GBP weakening against commodity currencies, but then not very clear in terms of trend. If we are talking about the USD, the Euro, the JPY, and the CHF. Why? Because we've got all this mixture of blues, reds, and reds with two tones, and then you've got the blues right here. But then you don't see that a lot with the CAD, AUD, and NZD. So what does this tell us? It tells us that we need to do a little bit more research and dig deeper into technicals. Now, when we go into the technical side of it, let's say if we combine the GBP and NZD, let's say we do this right now onto the chart. Okay, so I go onto the file here, get your market watch up and running. So you've got a GBP NZD, let's say, right here, and we go this way. Okay, and as you can see, it's really clear. This is let's say we start off with the 1 hour chart. Now, you guys have understood some of the ways that I actually identify trend and understand whether or not it is a mildly bullish, mildly bearish, or strongly bullish, strongly bullish or mildly bullish, all based on indicators like the exponential moving average. So I have been using this exponential moving average for quite a number of years myself, and I usually start understanding the trend with my own eyes. So I don't actually just go onto a tool and then rush and click on buy and sell. I always confirm with myself. So hence the reason I want to share with you guys on how you guys can identify trends yourself as well. Okay, so here with the use of the exponential moving average 250 and 100, 50, 100, and 200 are the same type of exponential moving averages used by the mainstream media like Bloomberg. You know, when Bloomberg actually advertises their platform and talks about a particular instrument, you can actually see that they use similar type of moving average with similar parameters, 50, 100, and 200. Okay, so here, for example, if I were to compare, I always compare, meaning that I compare what I see visually with 3 time frames, at least onto 3 time frames. So not just single-handedly looking at 1 time frame and make that speedy decision into what the trend is, because it's just not sufficient data if you are actually looking at just 1 time frame. Okay, so you want to like pace it out between short term to medium term to long term. So here, for example, let's use a neutral time frame of the 1 hour chart. Now, the 1 hour chart, we can see that GBP and ZD is definitely trading lower. It's trading at the 1.9412 area, but there you go. You want to actually apply the psychological level knowledge that I have actually given you as well. So it's trading at 1.9409, but as it goes lower, it'll approach the 1.9400 level. So what does that actually mean? It means that it is on the way down. It is showing that it's got rooms to go down, but it has a possibility or probability to reverse at the 1.9400 level. Now, let me just prove to you that that is definitely a very significant level of support at the 1.9400. Not only because it's a psychological level, but I want to also guide you to look to your left and look at whether or not at the 1.9400 is it or not a level of support that is quite significant in the past. Okay, so I never checked it yet, but I just want to see whether or not it has any correlation between support, significant support level, and the psychological level. So you have got 9400. Okay, so your 9400, as I've just put it there, you can see that you've got your wick right on the dot of the 9400. It has actually benefited with some support area close to that level or above that 9400 level. Now let me just go on to the 4 hour chart, and if I were to zoom out, you can then look at how we have had a very significant support level that has bounced off from the 1.9401 or 02, which is, you know, it's considered as 1.9400 level, right up to further levels at the very top. So from that level there, price have actually appreciated. You can actually look at that minimum 1,600 plus pips. But then if you were to consider that movement up to the wick area right there before it depreciated was about 2,300 plus pips. So is it a very significant level of the 9400 area? Yes, indeed. It is. So that's why we don't want to get overly excited with the sell at the moment, and we want to understand that there are some risk involved if we look into this further selling, because there may be, we don't know this for sure, but there may be a repeat or a copy of that movement of the past to actually bounce upwards. Okay, so let's look at how strong it has actually bounced upwards as well onto that level. You can see that it's indeed a very strong level. It has actually bounced up with very strong bullish body of the candle. We call them mother candles. And if we go on to here, we can see that again you have got bullish candles right there. Basically means that the bounce up of prices were mostly initiated by single bullish mother candles, which actually means that they were favorite spots for big traders, favorite spots for big buyers to come in to actually rush the order in with strongly and confidently because of that bullish mother candles. Okay, single bullish mother candles. So that is where we want to look at ways that could hint us whether or not it was a strong movement to the upside or not based on that level. So there you go, guys. You've got GBP and ZD at the moment. Yes, it's on the downside, but even on the 4-hour chart, it's got all these smooth indicators. Basically, these exponential moving averages are pointing downwards, flowing like a river, really smooth. And then you've got all these candles, current candles as well, under all the three lines, and that actually gives us a hint that yes, it's got a fair, I would say, strong, mild to strongly bearish at the moment for the GBP and ZD, but it doesn't mean that if it is actually strong, it will just continue to just fall like a stone. It would have its own timing of when it would like to reverse as well. So hence the reason we need to look for clues, and we need to use price action like the psychological numbers as well, looking left for significant support as well. Okay, so 9400 would actually be your area of potential reverse, potential rebound. So what does that actually mean? That actually means if we were to look at the 1.9400 area, it wouldn't be an ideal selling price. You would need to wait for the price to go under 9400, at least by 10 pips. So 9390 onwards would be a better selling zone or selling area in terms of price action. Okay. All right, guys. So far, so good. Joseph, you've got questions? Does that actually cover some of the things? We'll be looking into exact trade setup tomorrow. So I've got about 7 crosses, GBP crosses, to actually combine the knowledge of psychological numbers, because psychological numbers would then give you hints of entries and exit. But we will analyze these pairs from a market's perspective to look into its strength of trend and everything else, and then we combine with what we know and what we've learned on psychological numbers to actually enter and exit the market. So this is where we want to guide you guys to actually execute some trades based on some fantastic trade setups tomorrow, especially on GBP crosses. Okay, guys, all good? Any questions? Any questions at all, guys? You guys are okay? All good. Brilliant, Pratap. Thank you very much. Noshini, you're doing well. Yeah, that's good. So tomorrow, let's look into the same time as well. I've made this sort of a permanent timing for Malaysians especially. But of course, Joseph, if you think that the timing is actually good for you as well, you're most welcome to join us in our webinars as well. And we are looking at more participation of traders out there from different parts of the world, of course, welcome. But this is following the Malaysian time of 8:30 p.m., which is 3:30 p.m. Cyprus time. Okay, and we're looking at a permanent timing, of course, varied subjects and topics. And I'll evaluate on topics upon request as well. So if you guys have got any requests of topics, speak to your friends as well who are interested in trading Forex to actually join our webinars at the Errante's Education Center. And we are actually in the midst of collecting more and more subjects, but then we want to bridge the gap between theory and practice. So this is where the difference comes along a long way. is when we are able to actually bridge the gap between theory and practice. I mean, we've got overload of information out there already. You've got, a barrage of brokers or centers providing same type of information. But here at our webinars at Errante, you can actually find the difference where we guide you by the hand and we mentor you to actually bridge the gap between theory and practice. Okay, this is the most important thing. All right, guys, I think that's all I have for you guys in terms of time. And we will meet again tomorrow, same time, same channel, 8:30 Malaysian time, which is 3:30 in Cyprus, GMT +3, if I'm not mistaken, for those who are not based in Malaysia. Okay, so no problem. Thank you very much. Most welcome, everyone. Any questions before I go? Anything that's not really cleared up? Or if you want that to be covered again tomorrow, any topics, feel free. You can email me directly at ksimon@errante.com. Okay. Noshini, most welcome. Take care. All the very best. So tomorrow I see the possibility of looking into trades, opening trades. So you guys need to get on your mat, get set, and go tomorrow. Okay. So tomorrow will be the day that I will prepare. I've already prepared about 7 crosses, especially GBP. We've got some other bonus crosses as well. And we've got gold, and I want to also analyze silver, and I want to talk a little bit about silver tomorrow as well in relation to gold. We have had some questions about silver and also oil. So we want to look into a range of instruments tomorrow and share with you some short, medium, and long-term trade ideas that you can practically pounce on. Okay? All right, guys. Yes, sure. Let me just type out my email address, which is KSIMON, Simon, okay, at errante.com. Feel free, guys, email me on ksimon@errante.com. Okay, good. Most of you guys are on my group, on the GTI Telegram group, so feel free, you can distribute the email address as well, and we can get your queries and questions about trading and everything else, about your trades for the day especially, answered, and try my very best. Okay. Okay, guys, with that, I want to thank you guys from the heart, and we'll see you guys again tomorrow. We've got loads of expectations of volatility tomorrow. Tomorrow is Thursday. I'm also looking at Euro JPY, Euro GBP especially, and correlated pairs, as well as gold, because when we talk about GBP, I'll explain tomorrow, we see a correlation that have started since January on GBP crosses, certain GBP crosses, more than the others on with gold's movement, and it seemed that it has strengthened in terms of its correlation, positive correlation between some GBP crosses and the price of gold. Okay, all right, good. Okay, guys, take care. Thank you again. Thank you once again, and we'll see you guys tomorrow. With that, have a very good evening. Bye bye.